Robert Higginbotham is Head of Global Investment Services at Rowe Price. Robert, we're seeing this trend at the moment towards the big distributors becoming product providers in their own right. Is that a threat to pure play asset managers?
I don't think so, Mark. I think what anybody's looking for, whether they're a large distributor or a medium-sized distributor, is quality product. What it may do is change the nature of the services we offer over time. So it may mean that some of the larger distributors look for more component parts that they then build into their own products for their clients. But then medium and smaller sized distributors will still be looking for a broader range and maybe a broader range of multi-assets. So I think it's, as long as we stay close to the client and figure out what they need, quality product is what we're about, and then we just need to find out how to build that in a way that works for the models that the larger distributors want to build.
But whatever it means, presumably it means less or fewer basis points for you.
Look, I think margin pressure is a fact of life in every industry, whether it be asset management or fast-moving consumer goods. Again, it's about how we respond to that. If we are confident in the quality we can build, then ultimately we think we can continue to charge a reasonable margin for that.
But do you still see the volumes of money coming through, particularly as we go to this point where the baby boomers are starting to take money out of the stock market rather than rolling it up and putting it in?
Oh, look, I think asset management is a long-term bull market. If the world is undersaved and under-prepared for the long-term retirement of the citizens, I don't think banks or insurers ultimately are going to be able to have enough capital to provide sort of capital-backed products. Customers are therefore still going to need to save, but save in real assets, and I think that's where asset managers are going to come to play. So when the Bank of England recently regarded this as the age of asset management, I completely agree with that.
Okay. Now, one of the other trends we're seeing in fund management at the moment is the rise of indexation, particularly smart beta. Is that a big threat to active managers?
Well, I think like any market, where you get a lot of momentum behind anything, it's a bit like a boat going through the water. It creates waves and it creates tides, and in that creates uncertainty and it creates further sources of market inefficiency. So a lot of what active management is about is finding out where there are inefficiencies in markets and being able to exploit those for clients. When you start getting significant volumes of passive coming into a marketplace, by definition, that must create further pockets of inefficiency. So is passive a threat to asset management? It has clearly taken flows. I think that's fundamentally good for customers in the long term. I think it's up to active managers to respond to that and continue to find out where they can add value through finding good sources of market inefficiency.
But you don't see your business starting to go down the passives route just to compete with these other players that are in there?
No, look, I think the phrase of smart beta is interesting. If it is about saying, are there proprietary insights that we can generate through other forms rather than traditional bottom-up stock picking, so can you build proprietary quantitative models that are not pure play passive but still build proprietary understanding of where market inefficiencies exist? I think that's something that we absolutely can do and will do. Do I see us playing in the pure play passive where it's not really about exploiting market inefficiency, it's just about providing market beta? I think that's less of a game for us.
Now, you've mentioned the end customer a couple of times. One of the big trends we're seeing at the moment is this rise of multi-asset, absolute return style products. Are you at all worried that these are products that the end consumer doesn't understand and they could go wrong? They're incredibly complicated.
Well, they are. And look, the world, for as long as you and I have been working in it, Mark, have been looking for that wonderful combination of equity type returns with some kind of material downside protection. If we go out of our own industry for a minute, wasn't that what with profits was all about? And I think the market has been trying to find a solution to that need for decades and decades. I think multi-asset absolute return is another way of doing that. I have no doubt that there is talent in our industry that can absolutely do that. They've got the skill and the philosophy to be able to produce those kinds of returns. I also think that there is a risk, absolutely, that it is a wave that some will try and surf, where they may not have the capability to do it, and then customers will get disappointed. I think it's up to us as an industry to make sure that we road test products really thoroughly before we take them anywhere near our customers. It's not up to us to experiment with our customers' money. It's all about making sure that we've proven that we've got the capability to deliver any form of return, whether it's multi-asset absolute return or US large cap plus 2%. So I think if we get the right standards of product build into our industry, then the risk of disappointment should be less. But there's absolutely a risk out there, and I think it's down to, I think it's one of the positive roles intermediaries can play to help customers navigate through that.
Well, then when you are road testing product, whose money do you use? Because you need to run live products rather than just back testing.
So we use our own. So we have $1.2 billion invested in our own strategies that is purely seed capital, that is purely driven at seeding new strategies, getting live track records and funds up and running so that we can check that the fund manager has tested their philosophy and their process to the point where it's ready for customers to then put their own money into. And we are absolutely religious about saying that we will only take something to market when we've experimented with our own money first, rather than looking for customers to experiment with us.
Final question, what do you think is the biggest opportunity for asset management in the next 3 years?
Look, I think retirement has got to be, it's been much talked about, but the world remains undersaved. If you look anywhere in the world, even the most developed retirement markets, Australia, the UK, the US, most savers are probably only at around 50 to 60% of what they really need in order to get the right level of replacement rate. So for the asset management industry to engage with other parts of financial services, insurers, distributors, but also fundamentally and most importantly to engage with the end client to help them solve what I think is one of the biggest social issues we've got coming in the next 3, 5, 10 years around how do we provide people for a retirement future that is going to meet their aspirations. And that's why it's the age of asset management.
We have to leave it there, Robert Higginbotham. Thank you very much.
Thank you.